Good afternoon to all, and let me start by thanking the organizers for their kind invitation to attend and be part of this interesting panel discussion. So in my short remarks here today, I will touch a little bit upon the current issues related to the global economies, but also to the global financial markets. And at the same time, I will discuss a little bit about the steps that can be taken forward, especially for the European area, in order to revive the economies and the financial markets. So what are the main issues that we have been facing globally in the last few years? Certainly inflation. After a long period of time of monetary easing, of low interest rates, of various quantitative easing programs by European Central Bank, Bank of England, the US Fed, and Bank of Japan, and so on, and the fiscal stimulus that we had during the pandemic period, then the natural outcome of this long period of monetary easing was the inflation. And we've seen the inflation picking up a couple of years ago, and now because of the measures that have been taken by central banks, we've seen that inflation is gradually coming down. That was that's one of the main issues that concern basically and affect economies and financial markets. Another thing to mention here is the energy crisis. We had the geopolitical tensions, we had the Russian-Ukraine war that led to energy crisis, especially in Europe, because the supplies of cheap energy towards the European countries has been halted. So that was another thing that we have been experiencing. That was also obviously driving inflation. Then the response by the central banks to the high levels of inflation was to raise interest rates. That was a natural outcome and the natural response taken by central banks. Interest rates have gone up, whether it's in the US or the Eurozone area or the UK area, which on the one side, it's necessary because that's one way, basically, an important way actually to curb inflation. But at the same time, the outcome of that could also lead to dampening economic growth and making interest rates go up, makes it much more difficult for borrowers to borrow money. It becomes much more expensive. So that naturally would lead to a slower economic growth, and that's one of the problems that the Eurozone area is facing at the moment, the slowing down of the economic growth. Then these tensions that we have been experiencing in the last few years, and because of the wars, has also led to an increased market volatility. And that's again a natural outcome of the risks in the economies that would lead to an increasing market volatility. And we have the uncertainty surrounding energy prices, we have the uncertainty about the global trade, and so on. Another outcome of the turmoil is an increased risk aversion from the perspective of consumers and the perspective of investors. And the increased risk aversion, the outcome of the increased risk aversion is what we call a flight to quality, where basically investors would be moving out of the risky assets and they would be moving to the safe haven of safer assets, such as the US dollar, such as gold, such as US Treasury bonds. Then, if we look at currencies, we have seen a weakening of the euro compared to the dollar, and that could be an outcome of the safe haven flows. So flowing money to the United States, where the dollar is dominant and it's strong. Dollar strengthening also now because expectations of pro-inflationary policies that probably will be taken by the Trump administration. The euro is also weakened due to the fear of potential U.S. trade deficits, U.S. trade tariffs that can impact European growth. Tariffs taken by the United States against European goods. So this is the landscape that we have been experiencing. So one of the areas that, at least in Europe, that has been discussed extensively lately, this was an idea that came up in 2014. Not a lot has been done since then, and the last year we have seen an increased amount of discussion basically related to the Capital Markets Union. So that's we've seen, it's clear that Europe needs stronger capital markets to finance European companies, to be able to compete with other global competitive areas and regions such as the United States and such as China. So three important papers have been drafted to look into the issues that Europe is facing: the Neuer report, the Letta report about the single market, and the latest is the Draghi report. And actually ESMA, which I'm part of ESMA, so I'm a member of the Board of Supervisors of ESMA, has also published a report in last May, again putting down suggestions in order to improve the competitiveness of the European economies and of the European financial markets. So revitalizing the CMU, that's one of the priorities. And part of the discussions under the CMU is, for example, revitalize the EU securitization market, development of EU long-term savings products that have tax benefits, so that investors, European investors, instead of putting their money into US companies and entities, to leave their money and invest in European entities. So revitalizing the CMU is one thing that I wanted to mention. The second point that I wanted to mention is that I think it's also time to think about enhancing the euro, or making it, or working towards a Eurozone fiscal union, I should say, because we don't have anything at the moment. But this is something I think that needs to be carefully thought out. Promoting innovation. Innovation is key, and that's why actually money is needed, more money is needed towards innovation in the EU compared to what we're seeing in the United States. Reforms of financial institutions and the banking sector to make them more resilient. Improve transparency across the financial markets. Strengthening market integration, enhancing corporate governance, and put more money towards also the green transition. That's another area that has been talked about a lot, about the EU green transition. There is progress, but there is still a lot to be done to achieve the goals that Europe has set for the net zero emissions. So I'll stop here.